Real estate versus stock market. Which is better? Why? What is the best investment for 2022? Let's take a look. Welcome back and Happy New Year. I'm Eric Braceland with Braceland Homes here in sunny San Diego, California, where we guarantee the sale and or purchase of your home. Here on the Braceland Homes channel, we cover topics related to buying and selling residential real estate and trends happening across the housing market. Today we'll look at some of the best tax benefits of real estate investing. I'll explain the basics of real estate depreciation, real estate leverage, cost segregation, 1031 exchange, how to pay less tax on rental income, including rental property tax deductions, capital gains tax, taxes when selling a personal residence, the home equity loan, the home equity line of credit, and a surprise bonus. I'll also break down a side-by-side comparison of actual real estate and stock market investments so you can see the difference. Get comfy. You don't want to miss a second of this one. Folks often ask me, what are the best investments for 2022? They ask me stock market versus real estate. Which performs better? What do you think I tell them? All right, spoiler alert, it's real estate for me. Weird, right? So of course I'm biased being a real estate and mortgage broker. I did my due diligence and research and went all in on real estate a long time ago. I did that mainly because that's what fit my personality and circumstances. Obviously, there are people that do very well on both sides of the real estate versus stock market argument. Just know that I will mainly argue in favor of real estate because that's what I've chosen to invest in and what I love. What are the best investments for 2022? Stock market versus real estate is such a broad and interesting debate that I can't touch on everything in just one session. I'll definitely be returning to this for future discussion, but today, being early in the year with tax season just around the corner, I'm going to attack this from a tax perspective. As I alluded to in the intro. To set this up, I want to make it clear that I am not a tax professional and I don't hold any special tax certifications or licenses. All this is 100% legal, but you'll want to consult a certified public accounting or CPA and a licensed real estate professional, such as myself, when putting any of this to practice. I'll kick the discussion off focusing mainly on residential investment real estate, which includes rentals with up to 4 units on a single property, because that's where the really huge tax benefits can be found. And many of these concepts also apply to commercial real estate. Who wouldn't want to know how to pay less tax on rental income? But stay with me to the end because I'll also touch on how seasoned real estate investors and first-time homebuyers alike can leverage the tax code for some awesome advantages. So which of these areas of investment will give us the best tax write-off, tax breaks, etc., or just allow us to come out on top as far as keeping more money in our pockets? The news media and many stock proponents will argue that real estate is only a moderately profitable investment vehicle when compared to others such as stocks. This does appear to be true if you do a direct side-by-side comparison of these investments before factoring in the impact of taxes and leverage. Let's look at an example to see how this plays out. I'm going to keep things fairly clean and simple for the purposes of our example. To start, you'll see the purchase price of our investments. Right from the start, you'll see real estate wins. That's the green versus the red, if you're wondering. Why are the amounts different? Because with real estate, you use the amazing power of real estate leverage to control a much larger asset with a relatively small investment. You see here for both the real estate and the stocks, our initial investment is the same $100,000. Yet our investment in real estate, we are controlling a $500,000 asset. There's no leverage with the stock investment. We can definitely get started for less money in either realm. And many of you already know this. And you'll see I'm using the standard 20% down payment model on a home for this example. But there are conventional loans available for as little as 3% down. If you're an active duty service member or veteran, you can even get in real estate game for 0 down. Although it's a little tricky with investment properties. Next, we can see what our stockbroker and media friends are talking about. Generally, at face value, stocks appear to outperform real estate because of these pre-tax returns on that investment. Fair enough. Stocks win this round by $3,000. But what's this? We have to pay roughly 20% between state and federal capital gains tax on our stock profits? Yuck! Wait, no taxes on our real estate rental income? Why? We'll get to that shortly, but it looks like real estate is rallying for a comeback. Oh, it looks like the stock investment still wins by $1,000. Or does it? Ever heard of real estate depreciation? Man, real estate leverage is awesome, but real estate depreciation is even better. Physical, tangible items you can touch wear out over time, so the government gives you credit each year for that in the form of real estate depreciation on your investment properties. Sorry, you can't depreciate your primary residence. There are some exceptions to this if you are renting an accessory dwelling unit, commonly referred to as an ADU, a granny flat or something of that sort on your property. I actually do this with my own residence. It's super, and the rental income also covers 2/3 of my mortgage. You can also depreciate items inside your investment property separately from the structure through a process called cost segregation for even more of a tax break. There's a lot more to this than we have time to cover for today, but it is a thing and it's magical. Back to our example, we have determined our annual depreciation to be $27,000. Let's see how we can use that. So why didn't we have to pay tax on that rental income? It's because we offset our $7,000 in real estate income with $7,000 of our real estate depreciation. That leaves us another $20,000 to reduce the taxes on our business income or salary. This $20,000 tax offset equates to roughly $6,000 of actual tax savings in a normal 30% tax bracket. That's basically an additional $6,000 of tax-free income. If we take the initial $7,000 of tax-free rental income from our real estate investment and then add this additional $6,000, we now have a total benefit of $13,000 from our real estate investment. So in reality, the real estate investment outperformed the stock by $5,000 or 63%. Hooray for the tax benefits of real estate investing. So what do you think so far? Please let me know in the comments and hit that like button for me if you're finding this useful. Pretty great stuff, right? Well, it gets better. What if I told you you could continue to sell that real estate investment and upgrade to a bigger or nicer one that could generate you more income and pay zero capital gains tax on the sale? It's true. And you can play this capital gains exclusion game indefinitely. Ever hear of the 1031 exchange? Through the use of a 1031 exchange, you can sell your investment property and reinvest the proceeds in another like property while paying zero capital gains tax. Imagine that you're doing pretty well with your finances and you're growing weary of making repairs to that property you bought for $500,000 because it's old, or you don't like the quality of the tenants because the home is in a rundown neighborhood, or you want to upgrade to more units because your current rental is only a duplex or single residence. I get it. $500,000 doesn't buy much in a market like this one in San Diego. Time for an upgrade. 1031 exchange. Boom. Nicer property, better quality tenant pool, more units, more income, no capital gains tax. Love it. Anyone use this? Leave us a comment and share your experience. What about all you non-investor folks that own your own home or those that are looking to buy soon? Do you get any tax breaks on paying our Uncle Sam? Yes. As promised, there are some tax breaks on your primary residence. The capital gains exclusion allows you to sell your primary residence and not pay capital gains taxes on the first $250,000 of profit if you are single, or pay nothing on the first $500,000 if you are a married couple. Profit is considered over and above what you paid for the home. So if you bought the home for $5,000 and you sold for $7,000, your gain or profit would be $200,000, and you would owe no capital gains tax on that sale. You just have to live in that residence for at least 2 years to take advantage of capital gains exclusion. Here's a tax-free bonus resource for you homeowners out there that few know about or consider: borrowed money. Get a home equity loan. The money you borrow using loans isn't taxed. You can get additional tax-free proceeds from your real estate by refinancing your home loan to cash out some or all of your equity. Home equity is simply the difference between what you owe on the home and what the home is worth. Sticking with our $500,000 purchase example, with the $100,000 down payment, you are left with a $400,000 loan amount. Say several years have passed, you've paid your mortgage down to $350,000, and your home is now appreciated to a value of $600,000 because of an upswing in the local housing market. Now your home equity is equal to $250,000. 600,000 minus 350,000. So you have $250,000 that you can cash out tax-free with a home equity loan and go do what you want. Nice. You can also do something similar using a home equity line of credit, or HELOC, as you may have heard it been called. A HELOC is basically a revolving line of credit against your home equity. You can even get a credit card that you can use to charge purchases with. So forget taking that early withdrawal from your 401k for those home improvements, vacation, or new car. That option will fetch you a beating on taxes and penalties. You're welcome. By the way, you can even use a HELOC from your primary residence to cover the down payment on an investment property, as one of my clients just did. Pretty cool. I think I've given you plenty to consider and hopefully put into practice for now. At least I've given you something to pester your tax professional about. Give me a call or text me at 619-947-3560 when you're ready to get started putting these concepts to work for you. I'm still Eric Braceland, and thanks once again for tuning in and watching us here on the Braceland Homes channel. Thank you for increasing your financial literacy and considering real estate as a way to make things happen for you and your family. Make sure you join us again every Thursday morning at 11:45 a.m. Pacific Standard Time to get up to speed on all the current housing market changes. You will enjoy a better, more successful real estate experience because of it. If you've enjoyed this content or found it helpful, please hit that like button. Even a light tap should suffice. Consider subscribing to our channel so you never miss out on any of our new tips. And please share this content with someone you think might benefit from it. Thanks for joining me, and I'll see you right here next week.